Hello and welcome to this video. I am Dr. Subayal. I am a business strategist, award-winning scientist, and an experienced investor. And if you would like to see the dimensional analysis of stocks from a value-centric perspective, which is my unique approach of analyzing the stocks, please subscribe and welcome on board. In this video, we will be reacting to the video of Kevin on Tesla stock. So let's start watching the video, and honestly I know that people are going to point fingers at me, but I don't care. I say things which in my opinion make sense and are based on logic. So I have to look at free cash flow, the number of shares outstanding, and how they have been increasing or decreasing over the years, and then the net revenue for the past years and so on, to see if I will get a good value for what I am paying.
Hey everyone, me Kevin here. In this video I'm going to explain why I'm so freaking bullish on Tesla that I have now 14,000 shares of Tesla. 47% of my portfolio is in Tesla.
So first of all, telling people that a stock is 47% of my portfolio is something which is very irresponsible, and any responsible person shouldn't do that in my opinion, especially with such a big following. Putting half of your eggs in the same basket is very irrational. So Charlie Munger and Warren Buffett have to come up with a perfect company to make it 47% of their portfolio, though we know that they are not big fans of diversification.
But my bullish thesis is Tesla easily getting to over $130 billion in energy revenue, solar, batteries, solar roofs, mega packs, endless opportunities for Tesla. And so I think Tesla's energy division will be 20+% of their car division in 2030. Insurance. Elon Musk thinks insurance could be as much as 25% of the value of the company. I'm going with 15% of the value of revenue of vehicles. I'm worried this might be a little bit too bullish. So we'll see. And obviously the further you project out, the more risky things get. Now I'm including semis, robo-taxi, full self-driving again in vehicle revenue. We'll talk about consensus estimates in a moment, not so important right now. But in my opinion, that brings Tesla to, and this, who knows, I mean, this could be 2030, I don't know, I don't think it's going to be 2029. Maybe it ends up being 2032, but this is coming in my opinion. At 61 times earning, or at $61 in earnings per share, we could be somewhere around a $6,000 price in 2030 for Tesla.
The Tesla stock price going to $6,000 what does that mean? It means that with 1 billion shares outstanding, the market cap of Tesla will reach $6 trillion. So let that sink in for a moment. It means that the total market cap of Tesla will be almost equal to the sum of the market cap of the world's 3 biggest companies by market cap, which is Microsoft, Apple, and Google. So the Microsoft's total market cap, Apple's total market cap, and 74% of Google's market cap, if all of them are added together, that will equal to $6 trillion. So you must be in Disneyland to think this way.
But let's see how my projections here compare to Wall Street projections. Because keep in mind, my crazy bull thesis for Tesla gives Tesla a market cap of almost $7 trillion.
Now let's look at the net revenue and other assumptions which Kevin has to make for the market cap to reach $6 trillion at a share price of $6,000. So for any sane investor who has some brain, will never pay more than 20 times the PE ratio. But in some cases it can happen. I will come to that in a moment. So I normally look for a PE ratio of 16, 15 or less than that. So as I mentioned, in very rare cases where there is a company with enormous growth potential, you might pay a higher price for the future growth, but you cannot pay just any amount for it. So I don't know who will be buying Tesla stock at a share price of $4,000 $5,000 and so on to take the share price all the way up to $6,000. Definitely the people buying the Tesla stock at such prices to take it all the way up to $6,000 need better risk management. because there are thousands upon thousands of other companies where we can invest money and get a better value for our money. Now let's get back to numbers. So a P ratio of 20, which is my ceiling and I won't pay more than that for Tesla, we will end up in the following scenario. PE ratio of 20 means that when a market cap of 6 trillion US dollars is reached with a price of 6,000 US dollars per Tesla stock, we are looking at 300 billion US dollars in profits. Now over here we are assuming that Tesla will not print any more shares. Now historically, Tesla shares have gone up almost 4 times during the past 10 years, which is ridiculous. But let's make some very overly optimistic assumptions and say that the mentality of management changes and they don't do what they have been doing already. So what I am saying is that the probability of the things happening the way Kevin thinks is very slim. No, yes, if the growth potential of a company is very high, which can be seen by looking at the PEG ratio, one can relax the rule of PE to be under 20. But let me tell you that the automotive market is very competitive and the competitors eventually catch up in such markets. So the industries do evolve quickly and sometimes a blue ocean can wipe out the biggest companies, as happened with Nokia's mobile phone business. Now realistically, if we buy the Tesla stock with a PE ratio of 15, that will mean 400 billion US dollars in profits. Now with very optimistic assumptions, if the profit after taxes is 20%, it will mean that a revenue of 2 trillion US dollars must be achieved. And this is how I did my calculations. And with a PE ratio of 20, we must achieve a revenue of 1.5 trillion US dollars. So one more thing which Kevin assumes is that Tesla will not issue any more shares, but it has quadrupled its shares in the last 10 years, not via stock split. Now let's say that Tesla only doubles the shares in the coming 5 or 10 years. It will mean that Tesla has to achieve a market cap of 12 trillion US dollars for a share price of 6,000 US dollars per share, which will mean that the market cap of Tesla has to be 12 times the total market cap of the top 10 automakers in the top 11 list if we take Tesla out of the list, which is a ridiculous assumption to make, isn't it? Now let's have a look at the different key numbers and ratios over here for a moment.
So here is the total revenue and net income of Tesla for the last 10 years. And you can also see the maximum and minimum revenue and also the year in which that revenue was recorded. And also at the same time, you can see the maximum net income and the minimum net income as well as the years in which those income numbers were recorded. And over here you can see the growth of total assets, total liabilities and total equity over the past 10 years. And over here you can see the ROE over the past 10 years, over the past 5 years and over the past 3 years. And you can also see the growth rate of the shares that were issued during the past 10 years. You can also see the maximum shares outstanding and the minimum shares outstanding during the past 10 years and the years in which those shares were recorded. And over here we can see the free cash flow over the past 10 years and also the long-term liabilities. Free cash flow is very important because it is the money which the company uses to make new acquisitions and to pay dividends. And this graph is very important and it clearly shows that Tesla cannot pay its long-term liabilities with its free cash flow from the past 5 years. And therefore we get an investment feasibility score of 29% over the past 10 years, 50% over the past 5 years and 43% over the last 3 years. Feel free to pause the video to look at each one of these dimensions over the different time frames.
I know that sounds insane, but then again, I'm also the dude who has 47% of their money in Tesla stock. So I better be freaking bullish. So yeah, $6,000 price target, $7,000 or $7 trillion market cap. Either I've lost my mind or I'm going to be close. And even if I shoot for the moon and miss a little bit, I'm still going to have some beautiful tundies coming out of the oven, okay?
Of course you are bullish, and it is quite obvious. If you were not bullish and not delusional, you won't be making these unrealistic assumptions. And honestly, for all my viewers, this is the time to be afraid. So when people are overly optimistic and overhyping things, it simply means that it definitely is not the time to buy.
All right, let's look at what Wall Street is projecting. Wall Street is projecting, I backwards engineered this a little bit, so let me start with what they started with. Wall Street is projecting a consensus estimate of $389 billion in total revenues for 2030. And then they start tapering off after 2030. They actually think Tesla revenues will start declining in 31, 32, and you won't see growth anymore. You'll actually see shrinkage. And nobody likes to see shrinkage. Nobody. But anyway, if we kind of reverse engineer how we could get to this consensus, which, by the way, Wall Street estimates range from about $250 billion in revenue in 2030 up to $600 billion in 2030. So at $1 trillion in revenue, in my bull thesis, I'm pretty high. I'm potentially a little overly bullish. If we go with Wall Street's numbers, so this is Wall Street's consensus estimate, and we give them a 70 times earnings multiple in the future, this would be about a $1,700 stock, which if you buy it today at $700 gives you about a 9.24% return.
And here I will mention one point. So if you are following the Wall Street analysts, then you are already in the planet of apes and in a delusional mania. So Warren Buffett, one of the best investors in the world, he stays away from the Wall Street, actually many, many miles away, in a town where he can really focus, study the fundamentals of a company, look at all the key numbers, and then base his decision on that, instead of wasting his time in day-to-day chatter of these Wall Street analysts.
You could probably, if this ended up being true, you could probably do better elsewhere. Start with a smaller company. But I want to know what Tesla's thinking. So in order to know what Tesla's thinking is, I want to do some gigawatt math. Gigawatt!
So I will come back to the top 10 automakers again, so that we can look at the total demand of cars and to figure out if these numbers are actually achievable. The total market cap of the rest of the 10 automakers combined in the top 11 list is around $1 trillion US. So Tesla must have a market cap that is 6 times bigger than all of them combined to reach the $6 trillion market cap. This leads us to another interesting scenario. So Tesla will have to manufacture cars that are more than 6 times the total cars that are manufactured by Toyota, Volkswagen, Daimler, General Motors, and all of the rest in the top 11 combined. And this is the only way it can justify the price of $6,000 per share. Because at the end of the day, Tesla must create enough value to justify its share price, just like any other company. And this is how the value investors think. Because once again, as a value investor, I need to get more value for what I pay. Now let's say that Tesla manufactures 6 times more cars as compared to all of these automakers combined. But to whom will they be sold to? Because currently the numbers show that there is not so much demand for cars, and assuming that the demand will increase 6 times is very delusional. So will humans breed like rabbits to take the total human population to 6 times the current population on Earth, so that enough demand can be created for Tesla cars, which will generate enough revenue and earnings that will justify the share price of $6,000 per share, and also bring down the PE ratio to a sensible range so that I can purchase the Tesla stock. And once again, I am assuming that Tesla will not print any more shares, which is highly unlikely looking at their past track record. So here is another important point to remember. So let's assume that the rest of the 10 automakers in the top 11 list just go out of business somehow, which is highly unlikely. Can we still assume that most of the people, if not everyone on Earth, will only and only ride the Tesla cars? Are they affordable for them? So what I mean to say is that will the Tesla cars be affordable for all the people everywhere on Earth who are driving the cars of the other 10 manufacturers? And this will mean that the people who are in the third world countries will also be able to afford Tesla or some future model of it. No, in my opinion, it is not going to be possible because Elon Musk is obsessed with quality and innovation, and it comes at a price, isn't it? So here is the point, guys. So if Tesla cars come in the affordable bracket of all the people who drive the different lower price models of the top 10 out of 11 manufacturers, leaving Tesla out, we will see a reduced brand equity and diluted brand perception, which will have a self-cannibalism effect on Tesla brand itself, and that will eventually drag Tesla into price war that will eventually take it to the grave. And it will make room for the other automakers to cash in on that opportunity by competing with Tesla at the higher end of the market, where the big margins actually are. So here is the point, guys. Most of the revenue of Tesla currently comes from the sale of cars, and we don't know right now how operating in different market segments will work out for Tesla. What will it do to Tesla's brand image? So guys, assuming that if Tesla operates in all these different market segments, it is going to make more money, and all these market segments are going to result in enormous revenue and free cash flow, is just very optimistic, and we have to be very realistic while making purchasing decisions. This is not the way value investors think. Currently, most of the revenue of Tesla comes from cars, and it is a car company. Even though, of course, the technologies that go into building the cars can definitely create an impact in various industries and can be utilized to make different products and services. But assuming that everything is just going to work out fine and it is going to take the Tesla revenues to the sky and its stock price to stratosphere is just very optimistic, and we should not think in this way as value investors. So guys, these were some of my views about Kevin's video. Feel free to watch the whole of his video, and if you like my unique style of analyzing stocks, my views on personal finance, and also if you would like to learn high income skills, please subscribe, like the video, and press the notifications bell so that you can get the notifications of upcoming videos as soon as they are released. And I will see you in the next video. Bye.